Ladies and gentlemen, thank you for holding and welcome to the Wessanen Q2 half-year results event. At this moment, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Well, I'd like to hand over the conference to Mr. Christophe Benoit. Go ahead, please, sir.
Thank you. Good morning, everyone. We are reporting this morning on Q2 and H1 results. So I'd like to go directly to page 2. So this presentation I'll do with Ronald Merckx, and I start and Ronald will continue. What's happening in this half year is that we report on the core business, which is our own brands, a growth of 2%, which is lower than what we normally do. To be specific, this own brands growth of 2%, if we look at the volume value, so volume and price, is made of 4% volume and price deflation in supermarket mostly of -2 as a result of negotiation and high promotional pressure, and we continue to reduce the private label and the distribution business. If I go in page 3, that growth is done at a level of 8.7% EBIT, which is on track versus what we want to do, lower than last year. Why lower than last year? Because fundamentally we pushed for at the back end of Q2 for more A&P spend. Going into page 4. So fundamentally, what has happened, which makes us deviate from what we normally do, is basically a year in which the trade in France, being so enthusiastic with the organic food, as expanding violently the shelf, and we got more space in the shelf, but other people, specifically smaller brands, has got even more spaces which didn't were there. So it did happen in the past. So on the year when the trade deployed a new range, you proportionally lose what we call share of assortment. Assortment is growing, the consumer demand is there, but you lose in your impact in share of assortment and share of shelf. That impacts on the short term on the year basically your performance. That's one. Second thing, in France as well, we have a business in what we call dietetic food, which is a functional food, which is not anymore trendy, and that put pressure on Georg brand. And as a collateral effect, because the grocery trade, the supermarket pushed so much, it had impacted the growth in organic shops, so the specialized trade, what we call the HFS, the health food trade, okay, which has then impacted their growth. So France plays for a large part in our performance of this half year. And second thing, in the UK, we are suffering from let's say the consequence of let's say the Brexit and the action that many industrial players took, like us, which means we increased our prices last year. As a result of that, our range is lower than in terms of SKUs than what we thought. The promotional pressure is not there to support, and we got lower growth. These are fundamentally the two big things that impact our performance. And again, it's a year in which, specifically in France, large opening of range is leading to range reviews at the end of the season. And normally we can go back and show to the trade very simply, say, look, this is what we sell on Björk, this is what the others sell. Maybe you would like to rearrange your shelf to the benefit of Björk at the end of the year. So that's what's happening. Page 5. In the meantime, we are continuously growing, and specifically, we have managed very successfully our turnaround in Germany, because Alos is growing on the back of good innovation, deployment on dairy alternative, and we are very successful with Clipper in Germany in supermarket. Page 6, we are continuously as well expanding across more than our operating company. So I'll give you an example. Clipper is becoming a great brand. It has just been listed on EasyJet, and that's very good, and it's deploying as well in Scandinavia. We are pushing Isolabio even beyond Europe. Brazil is doing very well for us. Whole Earth is a brand we export and we get traction in the Middle East. And Bjorg, we have very nice business in the other side of the Mediterranean border, in the Lebanon in that case. Going into page 7, fundamentally, we continue to push our core categories and with a view to say how can constantly be ahead of competition, relevant with the consumer. So we go into plant-based protein, more protein in our drinks, source of calcium, we push that, we reduce the level of sugar, and we push into gluten-free dairy alternative. We're basically pushing our expertise there on what is our first product category. On page 8, as you know, we acquired some business a few years ago. So what do we do with it? Mrs. Crimbles has been growing in Q2 and is even selling now in the US, which is very nice. Destination is a very nice acquisition in which, because we have now managed to produce Alter Eco and Bonter Coffee at the Destination factory, so we've got synergies. And we are strengthening our business in grocery, which is very nice. And Biogran is doing very well. So we have Ecosystem, which is our brand in supermarket in grocery, which is absolutely booming, high double-digit growth. And then as well, we are integrating, let's say, for instance, the launch of the rest of our portfolio with it. Our Spanish business, like a Clipper, is being launched now by the team. So that's basically our business. And our performance, and I'd like to hand over to Ronald.
Thank you, Christophe. Yeah, good morning. I think if we go to the next slide, then basically it is just on some of the financials. I think the key one item to call out here is an exceptional item, as Christophe already alluded to. We've actually seen an increase in the deceleration or the decline of Gaylord Hauser, a brand that was acquired 20 years or so ago, which I think has created a lot of value for us in the period. But as we see this dietetic market in decline and a faster decline than what we had actually anticipated, and also having concluded a strategic review of that brand more recently, we actually decided that we will allocate fewer resources to trying to revive that brand, and as a result, the forward growth of that brand has come down, and as a result, under IFRS, we decided to take an impairment of the number that you see in the exceptional line item. In terms of financing costs and income tax expenses, they're all brought in line with expectations and what we said. I think if we go to the next slide, which is just the only other point of note, I think is the net debt development. I think that's come down by another 10 million in the first half, which is credible performance. Working capital basically in line with the same period prior year, as there's also been very little top line growth. Of course, as a percentage of turnover, we see that is stable. And the other big thing is, of course, we paid another 10 million in dividend in the year. So those are basically the key elements. And I think in terms of expectations, the revised expectations for 2018, the two lines that have changed versus quarter one are given the performance in Q2. We are now guiding for moderate growth of our own brands, and as a result of the expected lower top line, we would also expect EBIT percentage still at the same level of prior year, but previously we guided for an increase there. So I think that concludes our sort of brief presentation of the numbers, and now we'd like to throw it open for questions. Thank you.
Thank you. Ladies and gentlemen, for any questions you can press star 1. Thank you very much. The first question is from Karel Zoete from Kepler. Go ahead, please, sir.
Yes, good morning. Thanks for taking my questions. I got a couple of one. First, starting with the French market. What is the market growth you're seeing in your categories in the first half of 2018? And can you split that between the HFS and the supermarket channels, as well as highlight your own performance in France in the first half of the year? The second question is on the French market as well. Aside from the small brands that are getting more listings, what do you see in terms of private label competition and competition from some of the bigger brands out there? Because that's obviously a concern as well. And then the third question would be on marketing costs and investments. Given the setbacks in the French market, what should we expect in terms of activity, in particular around the Björk brand, in terms of pushing promotions and launching innovations in order to revive growth, and the impact on your marketing costs? Thank you.
Thanks, Kyle. Okay. What we observe lately on the growth side in the French business is on the specialized trade, no growth. So there's no growth. That's what we observe. It's not very reliable, to be honest, because we don't have any proper retail audit, but what we, to our best knowledge, is no growth. And the second thing in grocery, in supermarkets, we have a growth on how we measure that around in the market 7% year to date. Björk is slightly lower than that because of basically lower share of assortment, and to be honest, higher promotional pressure which impact the total net revenue, of course. So the volume is very nice, is according to that market growth, but the value is lower because, to be honest, when we do that, we invest for more. Okay, so who's benefiting from that is your second question. When the trade launch more brands, they launch a lot of things, inclusive of private label in our shelf. So, and this private label don't perform, to be honest, as good as we do today. That will be part of the range review that we will engage with the trade in at the end of Q3. The bigger brand, we don't see a major impact. We operate in France in a specialized shelf in which so the newcomers are more the smaller brands and some more private label. We always had private label. They are slightly more this year.
All right.
So that will be my reply on that. The activities, of course, we are very keen. Is there's one thing we defend is our business on Björk. So we continue to promote innovation. We have a good pipeline of innovation on Björk, which is getting deployed, but mostly to the second part rather than the first part. And the promotional pressure is of course well maintained with big events on the year to go on Björk.
All right. Thank you.
The next question is from Mr. Henk Veerman from Kempen. Go ahead, please, sir.
Yes, good morning, gentlemen. A couple of questions from my side. Could you elaborate a bit further on the competitors in France? So it's not really clear for me. So you mentioned private label brands, but are there also like the big brands who are being incrementally more aggressive? And I think a follow-up on that is, I think France is in Europe is one of the most well-developed organic foods markets, and Björk. I mean, if anything, Björk used to be your stronger sort of brand, also in terms of growth. Can we expect sort of similar trends and more aggressive competition if, let's say, penetration rates of organic foods would step up in other markets? In other words, is this what you're seeing in France? Like, we expect this maybe in a couple of years out in other markets? Those are my questions on France. And then I think also a question related to that is you mentioned, I think, like a rebranding and a redesigning of your shelf, but how well can you redesign your offerings in France without significantly lowering pricing? Because also, like, getting private label is more aggressive in terms of pricing, and I think what it seems now this half year is that consumer trends sort of changing a bit towards these like more aggressively priced products. My last question is on the impairments of the Gaylord Hauser brand. What kind of growth sort of did we see there that triggered this IFRS impairment, and in general, like, what kind of growth would trigger such an impairment also at some of your other brands? Thank you very much.
Thank you, Henk. So, the competition, I mean, same question than Karel. Basically, what we see in competition is that there have been players in which we are gaining share against. Let's say historical player is the organic shelf of a local player from Nutrition et Santé Company, which is losing share massively, and as well from Léa Nature, which is hit as well by the newcomers. So that's fine. Whether we see everything else on the second question, yes, France is largest business with very high growth elsewhere, you know, so it's not a sign of maturity. In many other markets, we have a different organization of the trade. It doesn't prevent us to grow. I mean, we are having a very nice ride in the UK on Rollers for the past 2 to 3 years, and it continues. Rollers peanut butter, it does very well. We are doing very well in Clipper all over Europe, whether it's in the Netherlands, in Germany, it's coming into Spain, and what we are achieving in Germany is very good. So that will be my answer. So on the range reviews, when you talk to the trade about reviewing your range, it's not because you pay a higher price that you improve your share of shelf. It's about the performance of each product on shelf. Is everyone justifying his presence on shelf, and what is the best optimization for our customer of their turnover? And in that case, you know what? Most of the time we are in, and this is where how we'll get some people out at the end of Q3. Then the impairment, I mean, only on the fundamentals of Geller-Dozer. Geller-Dozer was a brand acquired nearly 20 years ago from Danone, which was dealing with functional food, so mostly slimming food. There is a fundamental shift in consumer behavior to the benefit of organic food. It's better to eat healthy every day than having a hard slimming food. So for years we had a decline on Geller-Dozer. For years we don't want to put too much resources on it. For years we had a very, very nice cash flow stream of cash flow, and it will continue. But we don't expect future large growth. So that will be my reply before Ronald. You want to elaborate on that?
Yeah, thank you. Yeah, the key change is that we've seen an acceleration in the decline of the dietetic market in France. And secondly, you know, as I said previously, we've also changed what we want to do with the brand. So we are going to sort of reduce the resources behind it. As a result, we expect it to decline faster than what we had assumed previously, and therefore, you know, basically you need to do a DCF analysis under IFRS, and then it turned out that actually, you know, the value of that brand is actually lower than what it's in the books for. So it's a non-cash charge to the P&L. I mean, in relation to your question about other brands, for those brands where we have goodwill on the balance sheet, we have to perform these tests on an annual basis, and you know that's all elaborated on in the annual accounts as and when relevant for specific brands. You can't just, you know, pin one particular growth percentage on that, because it depends on future outlook, profitability of the brand, the actual size of the goodwill, etc., etc.
Okay, thanks. That's helpful. Maybe 2 follow-up questions before I pass the line. First one on the UK. It's still not very clear to me what is exactly Wessanen's reaction to what has happened there in terms of the negative responses to the price increases. Maybe you could elaborate a bit on what would be the way forward now to sort of reboosting growth in that business. And then secondly, coming back to the call discussion we had during Q1 on the input costs rise. At the time, Ronald, you mentioned that we did not see that yet at Wessanen compared to some other, let's say, larger food producers that already see these effects. Has anything changed incrementally in Q2 which might make you change or revise your opinion on that? Thank you.
On the UK, what we are doing every day basically is continuously pushing good stuff. So the pressure that we have, like many other food players, is all around the multiple grocers, so the five or even less chain of supermarket. Okay, so in that change, we are reacting by promotional pressure and innovation, and that's and range reviews management at this part of the year. But there's more than the multiple grocers. As our natural products are becoming, let's say, more trendy, we get a very nice ride on out of home, and the listing of Clipper, for instance, on EasyJet is typically a UK initiative that's benefiting for the full of Europe and the convenience area. So that will be my reply to that. On the input of cost, I didn't understand very well.
No, Henk. No, I mean it's basically still similar to what I said in Q1. I mean, across Wessanen, we don't actually see input costs significantly impacting our business or the margin. So that really hasn't changed. Thank you.
Okay, thank you. That's it for now.
The next question is from Mr. Reg Watson from the ING. Go ahead, please.
Morning, gents. I'd like to come back to this dynamic on the new entrants. Please tell me, are the new products and brands, are they actually coming from existing players, or are they new entrants to the organic and vegetarian market?
Sorry, they are mostly linked to newcomers.
Okay.
Basically, because you need what is the fundamental? If you look at the strategy of the retailer in France, where are they? They are fundamentally out of growth. Okay, plus they have a price war. So they have identified organic. To be honest, we told them that a long time ago as one source of growth, and they say, how can we maximize that source of growth? And the usual response is, let's put as many products as we can, and let's see what flies and what's fall off the shelf. So that's why they are frankly. So it's very nice, it's very good, and we are, to be honest, encouraging them to do so. And sometimes it's to our full benefit. Yes, sometimes to share the benefit with someone else, but then this is exactly the situation where we are. So mostly newcomers. Some will stay, some will disappear.
And then the own brand increment as well. How concerned are you that they will actually permanently shift some of the value in the organic shelf to their own brands rather than leaving it for the branded products?
We have been used to work with private label for a very long time. So, I mean, I came in that business for 12 years ago. The market share of private label in organic food was 49%. Okay, now it's 40, 45, 46. So they had a short regain short term, but we have managed to get them down. And it's all about our own reaction. So how competitive are we in price first with Bjorg? Second, what is our innovation that keeps us ahead of this private label? And that's perfectly fine. So we are here to capture the upper end of the market. They are here to capture the let's say the bulk of it.
Yep.
And the entry price of that.
Yeah. And can we just clarify something you said earlier, Christophe, please? On the grocery, you said that 7% growth year to date in the grocery channel. You said Bjork was less than that. Volumes were good, but value was lower.
Yes.
Do I take it to mean that there's price pressure in Bjork as well? I'm not quite
there is always price pressure. There is always price pressure, and the price is a combination of TPR, so temporary promotional rebate that we do, which we do that on purpose. So that because it gave us access to a gondola and better exposure on shelf for a small period of time, and with our good friends called the major key customer, whether it's in France or in Europe, the cost of doing business with them is inflating year on year, which is a classic rule of the game. Okay, yeah. So that's which we basically offset by better productivity, and that's why we have been pushing very hard on the upgrading of our operations, because when we get productivity in the supply chain, then we can get fuel for our growth so that we don't damage our margin.
Yeah. Okay.
So we know that is part of the rule of the game, and
yeah. And this thing, I get the impression from everything you've said that this is sort of something you've experienced before. This is very much, as you say, the rule of the game, the cut and thrust of doing business. But in the press release, you make the point that the French trade listed an unprecedented new number of organic products. So it does feel that whilst you've been here before, at the same time you've never quite been exposed to this kind of pressure. Is that a fair assessment of where you are at the moment?
No, we have seen that in different years.
Mm-hmm.
But on that year, it means that we take and this is where the way it works and why it might come as a surprise now is that for people external to the business is that you enter negotiation with the trade, you have basically the result of your negotiation April or May. Okay, so that's what you see what you relatively have achieved only then. So this is why it's there, and we have seen that in the past. And why is that? Because there's the key fundamentals of our business are not changing, which means there is even more interest in the organic food. And then, rightly so, our trade partners are just wondering what is the best range optimization. What is the best range mix between a brand like Bjorg, smaller competitors, and private label? And on the year where they massively take a shelf expansion by essence, we relatively lose. This is what's happening there.
Okay, and then is part of your confidence going forward to the second half in terms of range optimization that you feel your brands will actually demonstrate better resilience than the new entrants? Is that what gives you?
No, yes and no, and that's why we wanted to be clear as well. Is that when basically the rule of the game with the trade in West Europe is that you make agreement for the full year. Okay, so which means that the range that are here will stay until the end of the year at the minimum. Okay, so that's why we want to make it clear now.
Yeah. Okay. So then, really, the re-optimization of the shelf occurs for next year then.
No. Yeah. That doesn't mean we can do slightly better on the next quarters, of course, but we want to give you a view on what's happening out of trade negotiation, which is basically going to last for the full year.
Yeah. Okay. Fantastic. Thank you very much.
The next question is from Mr. Fernand de Boer, Degroof Petercam. Go ahead, please.
Yes, good morning. It's indeed Fernand de Boer from Degroof Petercam. I'm still a little bit puzzled about your guidance, because actually you said for the second half we see at least, let's say, a 50 basis points improvement. Well, listening to you, I hear a lot about promotional pressure, etc. in the UK and in France. So maybe a little bit to elaborate on that one. Also on the UK, but also in France, you said you had negotiations in, let's say, April, May, but the price increases in the UK were done last year. I think much earlier, and I always also understood that negotiations were also done, let's say, before year end, and then you have your budget for, let's say, the coming year. So how does it work then? So that's also a question. And then on Gaylord, could you give us a little bit of an indication how big that still is in terms of sales? And is this sales growth included in your branded business still at the moment? Or do you plan to get that out? And why don't you try to sell it, as it is not really, let's say, a fit in your other business? And that's it for the moment.
Maybe hi Fernand, on Gaylord, the size is still about 15 million euros on a full year basis, and it's declining, double-digit declines. I think the impact on the branded growth was about 70 basis points for the half year. What we've seen is what we've done first is basically looked at the impairment because the decline in the market and the sales development is basically a triggering event. Whether that's a brand that many people would want to buy, that's something maybe we will look at in the future. But for now, that's not something we've actively looked at. So that's basically Gaylord is there. I didn't quite get your question on the guidance, the 50 basis points. I don't recall, Christopher, or I just mentioned
I
that.
think you say for the full year you are assuming a kind of flat margins compared to last year, let's say, so 8.5%. If I take the decline of 70 basis points in the first half, then I think you need a kind of step up of 70 basis points for the second half of at least 50 basis points to get at, let's say, 8.5% again. So if I listen to your comments on promotions being very, very aggressive, let's say, both in the UK and in France, then I wonder if it is realistic to assume that in the second half you will have this step up in margins.
Yeah, that's also got to do with, phasing of various other costs. And what we're seeing at the moment, is that our internal forecasts are basically with the phasing of various costs, in A&P, SG&A, is basically that would be achievable.
But what I don't understand entirely is in the first half you are suddenly hit by all those new listings, yeah, and then you go back to the companies, to the Carrefours of this world, and you say, listen, guys, we have actually the better products, and then they take you back on board, or they sacrifice the other small brands in favor of you. I can hardly understand. I think that only works if you give them, certainly in the beginning, more listing fees, etc. So how does it work then in your P&L if you?
Fernand, I understand. No, it doesn't work like this. It will be part of the range reviews that will affect next year performance and be part of the trading condition of next year. In any case, there is a cost of doing business with the trade, and we are here to optimize that cost to get the best return of that investment. So that's what it is. So that will be my reply to that. You had a question on the UK. In the UK, as a consequence of the price increase was implemented all along the last year. As a result of that, we lost listings at the end of the year. During the second part of the year last year, that distribution is missing. That's why we now get the impact.
But why didn't we see then the impact in Q1? Why suddenly in Q2?
I think, Fernand, in Q1 we were still seeing some better growth on a number of brands, and it turns out that in Q2, there has been a slowdown in the UK relative to Q1. Still, it seems as a result of, as Christophe already said, further trade consolidation. The multiples, under more pressure, and as a result of that, we've seen in Q2, a worse performance than what we've seen in Q1, and a large part of that is what we're still getting back from the markets in the UK. Is still this sort of ongoing issue with the price increases that were taken. We didn't see that as much in Q1 with better performance still on a number of brands, but that's what we're getting back now.
Okay, thank you very much.
The next question is from Mr. Robert Jan Vos from ABN AMRO. Go ahead, please.
Yes, hi, good morning. I have quite some questions. What can you say about growth through the quarter? I suppose May was worse than April, but what about June? And maybe a few words on the start of the third quarter would be very helpful. That's my first question. Christophe and Ronald, you already spent a lot of words on it, but I'm still a bit puzzled. Why is there not more commitment to your Björk brand from the trade? Is it simply their opportunistic behavior, as you explained, or is it something else? Maybe you're blamed of a lack of innovation or something. Why is there not more commitment to the brand, which is which has a long history and is already on the marketplace for quite some years? My third question, the gross margin. That is, I suppose, that is price reductions, or is it maybe also mix? Can you elaborate on that? If I'm correct, it's the first time in many press releases when you mentioned, or not the press release, but in your comment you mentioned the split between volumes and pricing. minus 2% in the first half, the pricing component. When did you exactly start lowering your prices? Was that in the second quarter or very late in the second quarter? And then my final question, I appreciate your guidance on the 2018 top line and margin, but have the recent events also changed your view on the midterm model? So is 5 to 7% market growth and you being able to do at least that still viable? And the same question also for the EBIT margin. Is it not the case that much more is needed to establish this growth? So should we assume further margin expansion going forward? Those were my questions. Thank you.
Robert, hi. On the Q2 detail, there has been, and you might check that with some French retailers in the course of their quarters, we had overall food consumption very poor in the month of May, and affecting even our market. Okay, but I don't want to elaborate into the 1 month, etc. But yes, you're right. There has been a very poor Q2 overall performance of any food players, and let's see how the people and when we get the let's say the industry numbers, how this is. At all about my start of Q3. So on the commitment on Bjorg, we are getting more distribution on Bjorg. So the trade is super committed with us, but some other people are getting as well newer listings. So it's not, we are increasing our distribution on Bjorg, which is already a very nice thing. But if we have increased our distribution on Bjorg by, let's say, 5%, if the shelf has grown by 10, I've lost the share of assortment and share of shelf. This is automatic, but the commitment is there, absolutely. On price and volume, we are just giving you that because it has impacted us. Partly because of a high promotional pressure we put in specifically in Q2 that affects down the price, okay, that temporary promotional rebates, and still there is a good volume growth out of that. On the midterm, so I don't want to give a number. When we review that and ask ourselves, okay, so what's happening? Why is that? The fundamentals are very good. You know, what is happening is that we have in front of us a trade which is expanding the shelf because they believe in that, and we are a leader in that space. One, okay. Second, we have very nice brand and very nice product mix to compete, and what we have been doing as well to be able to be there in the future is to work on our cost competitiveness in our supply chain upgrade over the year. So we are more competitive than we were in the past to face a challenge of my niche is becoming bigger. This is what it is. So I don't want to elaborate on the numbers, to be honest, more than that. And on gross margin, you want to say a word, Arnold?
Yeah, well, what is exactly your question, Robert Jan, about?
Well, the gross margin came down. You also mentioned, of course, negative pricing. Is that what caused the gross margin to come down, or is it also mix effect or anything else?
Yeah, there's as always a whole host of elements playing into this. We're seeing positive mix effects with, for instance, good growth of Clipper that Christophe already talked about across our markets. A little bit of further margin, mix positively from the reduction in private label that we've seen again in the quarter, partially offset by this pricing effect. But again, we're also seeing that through some of the improvements in our operations that's helping to offset that. So there's not one particular item that's driving that in the quarter or the half year. It's a combination of all those 4 or 5 things that I've just mentioned.
All right, thanks.
The next question is from Anna Patrice from Berenberg. Go ahead, please, ma'am. Miss Anna Patrice, your line is open.
Yes, hello. Good morning. Few questions from my side, please. First question on visibility. You were saying that right now you'll make agreements for the full year, and that basically you expect that the range that you already have will stay like that, and that you expect that probably the trading will be in line with the Q2. But then what does your guidance mean for moderate growth? Is it flattish? Is it 1-2% growth of own brands? And 1-2% of own brands would imply that there should be some improvement from Q2. Second question on the margins expectations. I understand it's flat this year, but what do you think about the midterm? So before you were talking about roughly 50 basis points margin expansion as operating leverage kicks in. Do you think that now you will focus more on the market share and assuring that you have the market share stable or increasing, and hence you will reinvest your operating leverage in NP, or maybe you will reinvest in pricing? The third question on consolidation of the trade, because obviously in France there was some news on the retailers expanding or buying the smaller organic stores. How does it impact your development? Is it positive or negative for you? And the last, for the time being, I didn't understand exactly why the smaller brands were gaining market share. So what was there that they could offer that Wessanen could not offer for the retailers? Why retailers preferred smaller brands? And so my impression is that you're saying it's just volatility, that it will come and go. How much visibility do we have here? And so the last question on the UK, I understand that there's a reaction to your price increases. Why is it Carlo that has been affected? Because that's where you had only price increases, or what the reasons behind? Thank you.
Anna, good morning. So on the visibility on the full year, we do what we call moderate. First, this is not exactly, we a precise factory here. So we call moderate in the range to 2 to 4%. Okay, that's one. On the margin expansion, yes, we do see opportunity, and we have a plan that is delivering to deliver around, as we said, 30 basis points year on year on margin improvement. I missed your third question. The fourth is on smaller brand. Why does the trade take stuff that probably because we don't do? The trade is expanding in many categories. We are not present in all the categories and are not aiming. The more I stretch a brand, the weaker the brand. That's one of the basic rule of our marketing. So if there are very small categories we are not in yet, they will take a new brand and see whether that opportunity is worth staying. I didn't say it will vanish at the end of the year. I say that when we do a range review with a trade, it's about trial and errors, and they see what's worth in trying to. They want, and we are their partner, to optimize the turnover. So what is the best combination on Bjorg, other big brands, small brands, and private label? So they have pushed. They recognize that a bit too much that thing, so we will come to a conversation. Plus, we are here to offer them more innovation as well to come. In the UK, yes, Callo is the most severe hit. Mostly out. This is where we lost some listings. You're absolutely right, because of the price we put last year, and a delay of 1 hour innovation as well.
Okay, and what is the current trading? Because you had the small decline in Q2, but for the full year you expect 2 to 4% of own brand, so it implies acceleration in Q3, Q4. So maybe you can comment on how is the current trading in Q3 started.
No, I'm not going to comment on the current trading started. I keep that. I'm commenting on the close quarters.
Okay, fair enough.
I am looking at my compliance officer around me. So it's not. I don't want to be something. We try to explain what we do.
Okay, so then for the next year, basically, because you were saying that those arrangements that you right now agreed to, they will impact this year, partially next year, right? Because they will annualize. So next year growth will be slightly subdued. Does mean also next year margin expansion will be slightly subdued, and then afterwards we should see Wessanen going back to this 30 or 50 basis points margin expansion.
Look, you have heard me, so I let you draw the conclusion that, you have heard me. So yes, we do confirm growth on the full year. We do confirm a margin expansion next year because we do have a plan. And yes, we do confirm growth of next year, but I can't say be as precise as that to say whether it will be in the range of 4, 5, 6, 3.5. I don't know yet. So we are in the middle of the year is not finished. So if you were with us, we are actively pushing our Q3. Then we will push our Q4. At the end of Q3, we are preparing for the full year review on the next year, and that's our, let's say, yearly plan, which match basically the calendar of our trade partners as well and our innovation plans.
Okay, understood. Thank you.
Thank you.
The next question is from Mr. Fernand Boer, Degroof Petercam. Go ahead. Your line is open, Mr. De Boer.
Yes, hello, it's Fernand de Boer from Degroof Petercam again. Just on the private label sales, if I make the calculations, that must have been down also by some 30% in this quarter. I think that all starts now to annualize. So in the coming quarters, should that now be flat, or what should we make kind of assumption there?
Yeah, Fernand, you're absolutely right. The decline was around 30% in the quarter. And for the remainder of the year, there will be some small declines. I mean, there's always a little bit of volatility in that. But, as I've said in Q1 and what we talked about in the Q4 results for the full year is, most of that would be front weighted in terms of the first half for the comparison reasons. So in the second half, I would expect that to be significantly less. Maybe not quite flattish, but also not at the level of minus 30%.
Okay, thank you very much.
The next question is from Mr. Karel Soete, Kepler. Go ahead, please, sir.
Yeah, good morning. One follow-up question. Can you share with us the market share situation in the French dairy alternative market? Because it's an area that's quite competitive. So wondering what you've seen there over the last half year.
Dairy alternative in France, in grocery, is where we have the highest market share. So if Bjorg has, let's say, in average in the ambient grocery business, organic around 22-23% market share, in the dairy alternative, we have 2/3. It's about 65% of market share. So we are growing, continuously growing, and we don't observe any different trends that we observe on the different categories. So basically, there are less players because it's more difficult. It's a sort of barrier to entry. You cannot come very small. So we are fighting with our usual friends, mostly private label. We have been able to kick out a few other guys, if I may say so.
All right, thank you.
Ladies and gentlemen, for any questions or remarks, you can press star 1. Go ahead, please. There were no further questions, so please continue. No, gentlemen, there were no further questions.
Okay, thank you very much. Thank you for your attendance, and wishing you a great summer. See you soon. Thank you. Bye-bye.
Ladies and gentlemen, this concludes the Wessanen conference call. You may now disconnect your line. Have a nice day.